My name is Nora Mboya, your co-host for today and founder of the Express for Success. We are delighted to spend this morning with you. We have so much lined up. It's going to be an exciting session. We are all looking forward to it. So karibu sana. If this is your first time, we are very glad. Welcome to our Founders Conversation. This is our Thursday tweet every week, our weekly Thursday tweet. So you're very, very welcome. So Cindy, please take us through.
Thank you so much, Nora. It's going to be a bright day indeed. Dear founders, let me share a brief about our network. We are a group of founders that have come together through partnership initiatives for the economic growth of small and medium enterprises. Our vision is to ensure SMEs are competent, compliant, and capital ready. Being part of our network gives you access to mentoring, networks, and capital through our revolving fund known as Catalyst. Our three major delivery platforms are, number one, the Founders Profit Academy, which is an online platform where you connect to our certified mentors and coaches. The experience here is one of a kind, and it is not like any normal school. We will equip you with relevant skills, tools, and action plans on how to generate reliable recurring revenue for your business. Secondly is our Aspire program, which focuses on the younger generation for men and women aged between 22 to 30 years. These are the future business leaders. Here you get trained on how to identify your passion and turn it into profit through a learn and earn program. Finally is the Founders Network, a rich mentoring community that supports small and growing business owners on how to be competent, compliant, and capital ready. Conversations happen every Thursday because we believe engaging in the right conversations will stimulate the growth and success of founders. Today, we have a very informative lineup about profit using the Profit First methodology by Michael Michalowicz. Mike says, a financially healthy company is a series of small daily financial wins, not one big moment. Profitability is not an event, it is a habit. What habits are you cultivating to become a profitable brand? Remember, habits take time to build. It is not a one-time thing. The small wins require habit. So we will have a profit literacy talk by the speaker, Irene Sadia, a founder spotlight, where we have John Ronga, the founder of Focus Investment Consulting, Founders News. So help me welcome Irene Sadia. Irene is a lady that is very passionate about numbers. She can crunch them even in her sleep. She has worked in corporate for 18 years and is currently undergoing our mentorship program and setting up her farm that will deal with organic foods while supporting SMEs to become profitable. Irene seeks to connect people with solutions that will help them get unstuck and begin thriving. Welcome, Irene.
Good morning, and thank you, Cindy. Good morning, founders.
Good morning, how are you?
I'm very well. So thank you so much for having me on the Founders Conversation today. And this month, we've been talking about traits of a thriving founder. And so before we jump into that, since we are all founders here, what are some of the reasons that you've heard people tell you or share with you as to why they got into business? Or what is the reason that made you get into business? So I spoke with some friends of mine, and one of their reasons, some of the reasons they gave me is that they're in business. Some of them are in business because it's family tradition. Their family does business. Others are in business because it started as a side hustle. Some others noticed there was a gap and they felt they needed to fill in that gap. Others are just passionate about stuff, passionate about the environment, passionate about business, passionate about health, passionate about food. And so that's how they're in business. So whatever your motivation for business, I'd like to believe that all of us are in it for profit. if there's someone who's not in it for profit, I'd like to know who you are. So people have all manner of dreams, and I'm sure the founders on this conversation have dreams as well. So one person's dream was to own a home, another one to buy a car or buy cars. Another one, their reason is pay school fees, make sure they have enough money for healthcare. Others had, what other reasons? To be able to travel to spaces of whatever choice they wanted. And they're friends of mine on this conversation, who their dream is to own a few jets. But that's a conversation for another day. So today we want to talk about profit literacy. What is profit? Profit is a gain, a benefit, an advantage, and or in layman's terms, it is sales minus expenses is profit. What is literacy? Literacy is the competence or knowledge of in a specified area, the ability to be able to do something successfully and efficiently. So simply put, profit literacy is the ability to successfully and efficiently apply our profit to achieve financial stability. Now, I wonder how many SMEs feel that they are financially stable. Statistics have shown us and that more than 70% of businesses or business owners who start do not get to see their 3rd or 5th birthday. So it means there's a problem somewhere. There is a pain somewhere. And until we can address that pain, we will still have these statistics going on that businesses will not see their 3rd birthday. So moving on, we would like to just quickly highlight the pains of SMEs and possible solutions to those pains. So very quickly, as you can see on the slide, one of our frustrations is there's insufficient capital to do the things that we want to do, the things that we are passionate about, or we don't have enough cash flows, or maybe money is coming in, but it doesn't come in at the rate that is helping our business grow. Another pain is employee turnover. And employee turnover, I'm sure you know, if someone feels that they're not properly remunerated, they will move on. And so it means you're always training, you're always doing the everyday business instead of doing the things that you as a business owner are the only one who can do. Or another pain is we are marketing our business on a budget. So we don't have all the money we would like to have to be able to market our business. So very quickly, I have some solutions. These are not all of them. These are just some that I picked for the purposes of this conversation. So one of the things you could quickly do is increase your cash flows. Another one is manage your debt. So watch out for, it's very easy for us, especially in this COVID space, to quickly borrow to help our business move on. But sometimes we are not thinking it through. All right, so when we increase our debt, then it kind of runs away from us. And then remember, we are passionate about the things we do. So sometimes we just dive into the thing, into our business, and we lack to plan. We don't put systems in place. We don't budget. And so we find we are stuck. So if we get these done, then we start to help our business. A fourth one is accounting and taxes. So when I talk about accounting and taxes, I'm just saying that putting systems in place, financial systems that will ensure that you track your expenses, you're tracking your income, and of course, paying taxes. I know that's a word that many of us don't like to hear, but as it's said, that give to Caesar what is due to Caesar. So if we ensure that we are paying our taxes on time, then we don't run into trouble with the government. and we don't have any penalties levied on us. And so I believe all of us understand, how do we get to profit? Profit is basically sales less expenses. And I doubt that anyone would doubt that. That's really the thing. And so moving on, but has that worked for us? That yes, we are making sales, we are paying our expenses, but what's left behind is profit. But sometimes we don't even see that profit, or it's very little. It doesn't seem to give us the joy we thought it would give us. And so I have another solution, all right? And this has been developed by a gentleman, as Cindy had said earlier. This gentleman is called Mike Michalowicz. And basically what Mike is saying is flip that equation of sales minus expenses equals profit, and say sales minus profit equals expenses. It sounds very countercultural, but Mike also says that which is prioritized gets done. So basically in this equation, we are saying we are prioritizing profit. And so for every sale, take out your profit, and then what is left is what you run your business on. All right, so very first thing, so what he offers is very easy steps that help to start you on your journey. So number one, set up 5 bank accounts. These are not accounts on Excel. These are 5 accounts in your bank, all right? So account number 1 will be your profit account. Remember that elusive thing, profit, eh? So we are saying with every sale, take my profit first. So I keep that away. So whatever is left. So if I make a sale of 1,000 shillings, if I take a percentage of, for example, this is an example, 10%. So 10 shillings goes to my profit. So I only have 90 shillings left to do the rest. All right. Now, for those of us who have employees in our business, I'm sure you have some really outstanding employees who are there on time, who go beyond the call of duty, you're just impressed by them, you know? And so you want to remunerate them well, you want to give them bonuses. You really love having this employee on board. But let me ask you a question. Is there an employee in your business who works harder than you, who puts in more time than you? I doubt it. Chances are you are that employee who puts in extra time, the employee who's there before everyone, who leaves after everybody. So shouldn't you be the one who's getting the owner's pay, getting the bonuses? And so that's how this second account is derived. It is the owner's pay. So first was profit, second is owner's pay. And then of course, tax. Many times we use up all our money, and then when tax is due, we are in a frenzy. So if we have a separate tax account, so it's kept away when tax is due, you just go into that account and pay it. And so what that does for you is that whatever will be left in your account will now become your operating expense account. So you only run your business on what is left. Chances are you're saying, but that's not enough for my business. Yeah, if it's not enough, then your business is telling you you cannot afford to run it at the level you've been running it. And so we would like to move on. And of course, the last account is your revenue account, which is where all your money comes in. So it's from this account that you will distribute to the other 4 accounts. And so step number 2 will be to set up your target allocation percentages. And this is simply a formula that the business owner follows to allocate income into the accounts we've just talked about in step 1. So it's not anything to worry about. It's already set. So you just follow the percentages and it works for you. Step 3, every 2 weeks, transfer the money from the income account into all the other into all the other different accounts. And step number 4 will be keep to the discipline. And this is so important, to be disciplined with your spending, because it's very easy that I don't have enough money in my operating expense, so let me go take it from the tax account, or let me take it from the profit account. No. Then there will be no point of having opened all these 5 accounts. And if you keep to the discipline little by little, you will eventually get to where you want to go. Now, Mike also says that just because you're using this methodology, it does not replace your need for accounting. So every year, you need to sit down with your accountant and your Profit First professional and go over your financials to make sure that you're complying with the law, you're complying with what's required, all right? Because if your company is a registered company, there's certain things that, a public company, there's certain things you must do. So those you must do. What Mike is doing is offering entrepreneurs a chance to be able to see this profit that seems so elusive. So remember when we started our conversation, the one thing we wanted to answer is why is profit literacy important to founders? And this is important. The importance of this is so that you and I can achieve financial stability and eradicate entrepreneurial poverty. I don't know about you, but I'm really tired of entrepreneurs we're just stuck in this poverty cycle. So I think it's really important for us to be profit literate and just to know where is our money, and that is not a